Okay, guys, it's my third bear market, and I want to talk a little bit about that, what I went through in 2015 through that bear market, and then what I went through, obviously 2018, 2019, and then what we're going through now and how that's sort of changed. So 10 years in crypto, I don't consider myself an OG, and that should be kind of word of the wise to some of you. Because I'll see, people saying that they're an OG or something, they showed up in 2019 or whatever, may have you. Not that they don't know something or they don't have some information, but that being said, there's always people with deeper pockets. Your stack's not big enough. My stack's not big enough. Your stack's not big enough. Keep that mindset, guys, because the competition is getting more fierce every one of these bear markets. And that is one of the big takeaways that I would say that I've learned through these different bear markets. Now, the 2015, that was what I kind of called the crypto nuclear winter. And there were several reasons why it was, in some respects, a lot harder to make it through that bear market. It was just kind of like one of the main things that you could do was just sort of buy low and then ultimately hope to sell high. And that was one of your only plays. And as a miner, you had some of the same kind of economics that occur now. Obviously your power costs and then your equipment cost, and just being able to factor that in and venting the heat and moving the heat out and all those kind of things. But I would say where it's gotten more advanced is as more money has came in, just because they have a lot of money doesn't mean it's dumb money. You'll see these outfits come in, and more of them, not that they didn't exist in 2015, but you have more of these outfits that come in with, potentially hundreds of millions of dollars to sort of be unprofitable perpetually. And, there will be a lot of businesses that file for bankruptcy, and there have been a lot of businesses that filed for bankruptcy that are in the mining industry. But some of them can sit there and be unprofitable for 3, 4, 5 years. And their estimates, what they're trying to sell people on sometimes is the premise that, oh, well, Bitcoin, Tim Draper said that Bitcoin is going to go to $250,000 or it's going to go to this or that lofty price assessment when it never may get there. So you always have to be conservative on the price estimates. And I would say one person that's always actually been a pretty good indicator, pretty good price estimate is actually Arthur Hayes, who was the CEO of BitMEX previously. And I don't know, he's kind of on the lam. I'm not really sure what's happened with his case. But at the end of the day, he's always been very conservative about his price points and been very, very kind of accurate on not trying to pump too much hype and then not trying to get, obviously like crazy price prediction stuff. So this next bull run, he's saying 70,000 for Bitcoin. And I could kind of see that. I think conservatively, you just have to sort of factor in about 3x for Bitcoin. If you're stacking at these price levels, 3x. Ethereum, assume 5x. You can get 5x out of it, make it a pillar of your investment. And here's where you have to become more nimble and you have to be smarter and obviously use more advanced strategies than the competition, is the ability to leverage your assets. You can leverage against your Bitcoin, your Ethereum, your BNB, your Doge, your Litecoin. So, as we kind of had this kind of last run up with Litecoin that I had, talked about for over a year of what was going to happen and good price points to be in at. And I told you guys when to feather out. If you followed me on that, could have really, really, really either increase your stack or just, caught a big win, whether that went to US dollars to pay off other stuff, or that went to stack more Bitcoin, more Ethereum, more BNB, or rotated to Doge to stack more Doge. Because some of the stuff is on a different sort of timeline, with the halvening or just kind of news cycles and various different things. So that being said, if you were stacking Bitcoin or Ethereum or BNB, and then you levered against that to buy stable coins and then bought the Litecoin, let's say a year ago, and then let it run up, coming up to the halvening, and then sold out of it, you would have been able to pay off your loan, and you would have had additional Satoshis or whatever if you wanted to stack more Bitcoin, for instance. So you have to be more advanced. You're up against more advanced players because we had more advanced tools. 2015, that would have been fine to just, buy low, just stack a bunch. And then as 2016, 2017 came around, we were able to be more active, whether that be on the blogging platform. Steam, it came out in 2016. We were able to be more active. So you had these advanced faucets. Now, one of the actual realizations that I've made in crypto, that in general, if you think about it, because this has been a talking point, Richard Hart had talked about this, that every single crypto cycle, there's always this hourglass scam that always comes out, and he was basically defining, let's say, SafeMoon as an hourglass scam this last cycle. Essentially, people are going in, they're paying a high fee, there's high friction in and out, and it's kind of more about getting in and then staying in for a longer duration and being able to be in there longer before you kind of pull out of it, and hope that there's more people coming in and you got exit liquidity. But that is all crypto in general. If you think about it, a lot of crypto is really, and and again, I'm using the word scam in this situation very, very lightly, that it's all this, it's this gamification, this economic system is in some respects an hourglass scam trying to capture the wealth from other areas. Because where is the inherent wealth, I guess, in this world? It would be, land, it would be resources, those kind of things. Now, even the commodities, the precious metals, are sort of an extraction of sort of that base, because you don't need it to live. If you think about it, something, what do we need to live? If you have some land, you're able to hunt, you're able to grow food, you could survive, you could sustain yourself. All this gold, silver, platinum, palladium, all this other stuff is an extraction to either, kind of flex and kind of have a showcase of wealth, or, for electronics and stuff like that, for computer systems. So that's sort of an extraction. And then it's just like, well, what is someone doing day to day, let's say in the crypto market? You could be doing 100 different things on a day-to-day basis. But this is what I would say about the competition of it. The competition is so fierce that probably 80% of people really should just be looking at the kind of top 20 things on CoinMarketCap. Maybe avoid, obviously there's stable coins and stuff like that. Maybe they, avoid that and go around that. And, even if they just bought a little bit of all the things that weren't stable coins in the top 10, 15, or 20, 80% of the people in crypto, 80% of investors would just be best served doing that, and then just basically staying in until the next bull market, and then assume that the peak is going to be somewhere around December of 2025. If we continue on this kind of 4-year cycle thing, which we have, previously. And a lot of times these things kind of play out because people sort of expect it to play out, and people gear up for that. But this is the first recession that crypto has encountered. So that's an extra caveat, but there's, this whole premise of having a Bitcoin ETF and potentially an Ethereum ETF on the US stock exchange is sort of an increasing probability potentially. But you also have more companies now that have been sued by the SEC than ever before. So on that, should you avoid, some of the issues, some of the different, ones that are these alleged securities, Solana, Cardano, that new one that's like Toncoin, that's actually like Telegram, sort of the currency of Telegram. It's an alleged security. The SEC has just kind of lost a lot of credibility by suing everybody. So, at the end of the day, cryptocurrency is a 24/7 market that's worldwide. So in a lot of ways, it does cut off a lot of the newbie investors that are going to jump on these platforms like a Coinbase to potentially buy some of this stuff. But I don't think that it's going to exclude it from maybe banging out 10x, 20x. Now, I've said this before, that if you really want to make multiplied millions going into this next cycle, you're going to have to, A, be more competitive, but also you're going to have to come in with more money than you did last time. You're going to have to come in with $250,000 conservatively to really kind of bang out. because there's all friction coming in and out. There's always friction coming in and out, and then you're never going to hit absolute bottom, absolute top. So don't assume you're going to do that. If something goes 100x, that doesn't mean that you're going to capture 100x. You might only capture 40x, which is fine by me. But just know that that's kind of the situation. So you have to increasingly become more competitive in these markets. How can you do it? You got to lever, like, you have to have a lot of knowledge of all the different things. Knowledge of mining, knowledge of like arbitrage. There's a lot of money to be actually made on low liquidity exchanges as well, where it's like there's these projects, people are trying to get in and out, liquidity is low, and sometimes it might even be like just $1,000 a day or something like that that's kind of going through the exchange, but people placing their orders, and then it's like, well, somebody wants in or they want out. You're able to capitalize on that and then flip the script and then go the other direction. You just go back and forth, and that's actually helping, you know, liquidity wise. That's helping on the exchanges, because people do show up there and they're like, dude, this order book's so thin. But if you were there to provide the service of market making, essentially, you know, and at one point you're the sell side, and then after that sells, then maybe the next day you're the buy side, you know, and you just keep going back and forth, back and forth. I know guys that do that with different projects. I've done it before. I've done it with Hex. Back when kind of Hex was newer, I was doing that on Hotbit. So you kind of see these arbitrage opportunities, or these kind of market making opportunities over time. And then you could all be doing that with levered money. Again, it doesn't mean, if you're doing that, that doesn't mean you have to sell your Bitcoin stack, your Litecoin stack, your Ethereum, your BNB. Doesn't necessarily mean you have to sell that. You can be levered against that. Now, this is a conversation that came up with kind of a mining outfit, and I've actually had this conversation with a lot of miners, actually. A lot of them end up stacking their coins, and you know, they're just sitting on these coins and sitting idle and stuff, and that's just a lot of bread sitting idle that can be levered against and earning a return off of that. Now, there's inherent risk with that. There's potentially contract risk of doing that. There's bridge risk. If you bridge that onto, you know, another ecosystem, whether that's a Binance Smart Chain or it's Phantom or it's Avalanche, you have bridge risk, you have contract risk to be in a money market. There's always an inherent risk, but you try to mitigate those risks. At the end of the day, other people are willing to take those risks, so they're going to get ahead, or they're going to be the ones that are going to survive this. We're going to have another 6 months to a year of pain with this, potentially more. You have to prepare for more. But like I've said, and hopefully this is a little bit of an insight of kind of the way I'm thinking. What do we have now that we didn't have the first two bull markets, or at least the first bull market? We have NFTs, which, you know, could purchase you, you know, potential ownership in some sort of future metaverse. Now, obviously, watch out for scams. You have NFTs. It could be part of a collection that could get you into a club that could help you rub shoulders with others who have money or doing big things. So you have to think about it like that. It's like get you in the club. There could be potential on that, even outside of just the potential that it's going to earn you some sort of, you know, just that you're going to just, you know, pure speculation that the price is going to go up. And, you know, you're kind of early on that. And then you have the ability that on some stuff like Splinterlands, which is built on Hive and, you know, has been very successful on the Hive blockchain, people can actually sort of lease out their cards, because these people playing the game need that certain character with these certain powers and all this other stuff. So it ends up being this ecosystem that there's a lot of different ways people engage in. And I mean, somebody could just completely live within that ecosystem, or they could do a bunch of different things in crypto and sort of compound a lot of these different things to try to increase their stack, But I would say 95% of people are not good enough against the competition, because let's just say if I'm the competition, you know, I need to be better than 95% of the other players, and I need to be in that upper 5 percentile. And that's a lot of the way with a lot of different things. again, the competition is getting greater and greater. So now it's like, well, why am I telling you guys this? Or why am I trying to consult with different companies? Why am I doing this? Why not? Because my stack's not big enough and your stack's not big enough. So at the end of the day, you know, everything is just it's all relative. So, you know, like I said, this last go around, you know, we go with the cars. Next go around, next bull market, and I've told you guys this before, I'm going for the jet. I'm going for the jet. So anyway, guys, lock into what you're trying to do, what kind of lifestyle you're trying to live, and, you know, just the things you're trying to accomplish. And don't think it's too big. You know, again, it's all relative. Figure out a way that you can do it, figure out a way to make it happen. But you're going to have to compete with these other players. So if you're just stacking Bitcoin, Litecoin, Ethereum, it's not a bad strategy, but you're cutting yourself off from a lot of earnings if you levered against that. You're cutting yourself off if you're not maybe going a little bit further down coin market cap and looking at some of this other stuff that has the potential to go 10x, 20x. And you know, the link between NFTs and real property, or NFTs as being part of a club or part of some kind of gaming system and stuff like that, it's not necessarily scam. There are a lot of scammers out there, but it's one of those things that you got to tap into if you're wanting to maximize your gains this next bull run. So anyway, guys, that's the video today. What are you guys stacking? I'm starting to stack. I'm not going to tell you exactly what I'm stacking, but more and more stuff is looking a little better, but I have to prepare that I could be doing this for 6 months or a year, and it's very painful. Very painful. It's not fun, and you have to be willing to do what other people are not willing to do if you want to get ahead of them. You know, I'm not saying you do something fraudulent. I'm just saying most people, they don't want to be stacking during this time. It's not fun. It's not fun. It's not fun to stay engaged. But that being said, guys, follow me on all social media at Brian Phobos, YouTube, Instagram, Steemit, Twitter, Hive, DTube, everywhere.